For a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. Going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence.
Tariffs have also led to political decimation. McKinley most famously put tariffs on in 1890. They lost 50% of their seats in the next election. Smolley put on their tariff in the early 1930s. We lost the House and the Senate for 60 years. So they're not only bad economically, they're bad politically.
President Trump touting his new tariffs as a major win for America. But Republican Senator Rand Paul of Kentucky says it's a really bad idea. We're going to go through the president's plan and the international reaction straight ahead. Plus, we'll dig into new reporting that Elon Musk might be leaving Doge after massive cuts to the federal workforce. Also ahead, we'll get expert legal analysis on a key hearing over the Trump administration's deportation flights to El Salvador. Good morning and welcome to Morning Joe. It is Thursday, April 3rd. With us, we have the co-host of our fourth hour, Jonathan Lemire. He's a contributing writer at The Atlantic, covering the White House and national politics. Former Treasury official and Morning Joe economic analyst Steve Ratner. A great day to have Steve on to get his analysis of what's happening. Co-founder and CEO of Axios, Jim Vandehei, is here, and CEO of the Messina Group, Jim Messina. He served as White House Deputy Chief of Staff to President Obama and ran his 2012 re-election campaign. Good to have you all on board this morning, along with Willie and me. So Wall Street is reacting sharply overnight to President Trump's sweeping tariffs on most major trade partners with the United States. The Dow futures were down as much as 1,000 points, while the S&P 500 and the NASDAQ have lost around 3%. The president is imposing 10% tariffs on imports from all countries, set to take effect Saturday. And that's just where it begins, Willie.
Yeah, and the president also announcing larger taxes on dozens of countries that he and his administration say have treated the United States unfairly, in their words. These so-called reciprocal tariffs hit the United States' largest trading partners, but not clear how the president or the White House calculated those numbers. A handout from the White House listing the tariffs said it included currency manipulation and trader barriers. Here's some of what the president said yesterday from the Rose Garden.
Jobs and factories will come roaring back into our country, and you see it happening already. We will supercharge our domestic industrial base. We will pry open foreign markets and break down foreign trade barriers. And ultimately, more production at home will mean stronger competition and lower prices for consumers. This will be indeed the golden age of America. It's coming back, and we're going to come back very strongly. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind, we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that.
So, meanwhile, Donald Trump's former vice president, Mike Pence, criticized the tariffs sharply on social media. He called the president's plan the largest peacetime tax hike in U.S. history.
Yeah, we're going to get reaction not only from Republicans, but around the world. Markets across the globe have taken a hit following Trump's tariffs announcement. Officials in the European Union, China, and Canada say they're preparing to take countermeasures. But Treasury Secretary Scott Bessent is warning against any retaliation.
You know, you look at this list of all these countries, and there's some policy decisions here. China is at 34%, added to the 20% already. So that's 54% on Chinese goods.
Yep.
Are they going to come back with something big?
Well, we'll see what they do. Is my advice to every country right now is do not retaliate. Sit back, take it in. Let's see how it goes, because if you retaliate, there will be escalation. If you don't retaliate, this is the high watermark.
Indications suggest many investors expected the tariffs to be far less expensive than they turned out to be. Retail giants like Walmart and Target saw shares drop in after-hours trading. Nike, which produced 50% of its footwear in Vietnam last year, fell as much as 7%. And Dollar Tree, which imports many of its goods from overseas, tumbled 11%. Steve Ratner, big picture here. Your thoughts?
Look, as you said, this was much more significant than people thought. The numbers are truly staggering in terms of some of the levels of tariffs they're putting on. China goes to, I think, a 54% tariff on everything we bring from China. All the iPhones, all the clothes, all the toys, all the bicycles. So much of what we need is made here. And the prices are going to go up very, very substantially for these goods for the American people. And it's going to have severe economic consequences because it is like a tax.
Right.
It's going to slow the economy down. It is going to add to inflation. And I think it is not inappropriate to start to use the R word for recession in the context of all this.
So the basic premise, sorry, Willie, is I'll go to you, actually. The basic premise here, the president says, is to address some form of cheating. And is that the case? I mean, or what is he addressing here with these tariffs?
There's so much, and Steve has charts, luckily, because there's so much to say here. First of all, a fundamental misunderstanding of who pays the tariffs, apparently from the president. He says these nations, China, Vietnam, they're all going to pay these big taxes. No, the importers in the United States pay them, therefore pass those on to the wholesalers and the distributors and down to consumers and all that. Also, the way these numbers were calculated, when he says the EU, for example, has put this percentage tariff on us. It's not true. He's representing a trade deficit, not to get too far down in the weeds. But there are smart people around him. I'm trying to figure out how to ask you this. The Treasury Secretary, Scott Bessent, was an econ professor at Yale. They understand how the economy works. They know this is bad and wrong, and yet they're going along for the ride. So when you look at that board and you see those numbers, what do you see as the future for the American economy?
I think it's going to be very tough. So look, he is a 19th century mercantilist. He is taking us back to the days of William McKinley. Tariffs didn't work particularly well then. There's no particular reason to think they're going to work well now. What he's got on that board, what he's trying to say is the actual tariffs that those countries charge are mostly quite low, single digits in most cases. He's raised it up to double digits, significant double digits with these non-tariff barriers, claiming in effect they use other kinds of mechanisms to keep our exports out of their countries and protect their domestic industries. There's some bits of truth to that here and there, but this is not the way you address it.
So, Steve, it's not just former Vice President Mike Pence with the dire warnings. J.P. Morgan put out guidance last night, also agreeing this is akin to the largest tax hike since 1968. They say a recession very possible in the aftermath of this. So this seems to be twofold. As you noted, like your average American is going to be paying more for a lot of goods starting in just a few days' time. But also, let's talk about the markets. Americans are going to, those who have 401ks are going to see hits there. Real worries last night. How are you seeing both overseas and then, as we're a few out here, you can see all the red on the board there. We're a few hours from the opening bell on Wall Street, too.
Yeah, there's pain for everybody. And the reason why stock prices are down so much is, yes, they're going to pass through the vast bulk of this cost to consumers, but they're probably going to have to absorb some of it. And secondly, and that's a market chart showing the reaction. You see the last 2 days, the market, was doing fine. It was going up a bit. And we've got the three indices there, the S&P, the Dow, and the NASDAQ. And then you can see that at 4 o'clock, the moment the president started speaking, you can see what happened. And it just kept going down from there. So the companies will have to absorb a little of it, but they're also going to lose a lot of sales. People are not going to be able to afford iPhones. They're not going to cost 54% more. The tariffs are actually imposed at the border on the value of the iPhone when it gets here. And then there's more costs inside this country for supply and distribution and so on. So they're not going to go up 54%, but they go up 20% or 25% or some number like that. And so people are going to buy fewer iPhones. And they're going to be less well off economically because they have to pay so much more for their iPhones. And that's why JP Morgan is saying what they're saying. And in addition to Mike Pence, of course, the Wall Street Journal has another hard-hitting editorial today. The best friend of the anti-tariff crowd is the Wall Street Journal, and they have just been battered